Good day. Welcome to Scholars Tutorials. Don't forget to like, share, and then comment so that another person too will get importance of the video. Make sure you share for us so that you make the video trend for other person to benefit, and also subscribe to our YouTube channel so that any video that we make, you get a notification. Okay. So today we are going to talk about the scope and the meaning of accounting. So the scope and the meaning of accounting. As an accounting student that you're about to start doing accounting, you have to know what accounting is and then the meaning of accounting. So now you start by knowing accounting. So I'm going to take the definition of accounting. So the definition of accounting states that accounting is the art of collecting, identifying, recording, interpreting, analyzing, summarizing, and then sharing information to its users, that's accounting users, for them to make informed judgment and decision. Okay, so now I'm going to take it one after the other and then explain it better so that you get an understanding of it. So now I'm going to take the first one, that's collecting. So in accounting, before you start accounting, you have to collect data, collect information from sources before you can account for it. So next one, you go to the identifying. So after you've collected the information, you have to identify it and know where each and everyone is going. Now after identifying it, you go to your recording. So after identifying that this is going here, this is going here, now you can go ahead and then record what you've collected. Now after recording it, you interpret. That's interpretation of account. So you interpret it. After interpreting, you go to your analyze. So you analyze the information and then you summarize everything. After summarizing everything, now you communicate it to the users. You communicate it to the users, such as, let's say, you have shareholders, you have governmental agencies and then staffs. They will need that information, so you have to communicate it to them for them to understand. So when we say accounting, this is the whole accounting process. So it's the act of collecting, that you collect information, identify information, record the information, interpret the information, analyze the information, you summarize it, and then after that, the last stage is you communicate it to the users. That's the end product. Okay, now we've known the meaning of accounting. So we are going to know the users of accounting information. Okay, so now we are going to look at users of accounting information. So those who are willing to use the accounting information, those who need the information. That's when after summarizing everything and communicating the information, those who are willing to use it, the information. So now let's look at, we have two types of users, two different types of users in accounting information. So the first one, we have internal users, and then the two, we have external users. So we have internal users and then external users. So you are going to go deep and then know where the internal users are and then the external users too. So when we say internal users are users who are in the company, inside the company, who are willing to get the information of accounting. And then when we say the external users, so the internal users, we can talk about someone like the management. So the management of the company may need the information to know how they are going to run, to know how the profitability of the company is going, to know how let's say how they are going to manage the company. Okay, so now the employees may need the information so that they will know the profit and then know how they are going to be paid and know if whether they have been paying good or the payment that they've been taking is not enough. Okay, so now let's go to the external users. So let's take someone who is an external user, like we have shareholders. So shareholders are interested in the accounting information so that they can depend on it and know how many shares or the returns that they are going to get in the shares that they've acquired or they've applied for. Okay, so now the shareholders are willing to get the information from the organization. Now let's take someone like the customers. Our customers will also know will be willing to know the information on accounting, that's the accounting information, so that they can use it to know whether the company that they are working with is going to work for a long time, or they are going to collapse or something, also so that they will know the profitability of the company. And again, we also have the suppliers, those who supply us the goods. So they have to know whether if this company that we are supplying are going to work and then go further, and know the profitability of the company. Now we also have other one, that is the governmental agencies. Like, okay, so let's talk about the governmental agencies such as, let's say, GNRA. So the GNRA, that's the Ghana Revenue Authority, who is responsible for tax, will be interested in the information, that accounting information. They may need and know how many tax they have to charge. Okay, so we also have investors. So potential investors, those who are willing to invest into the business, they have to know how the financial position is, and then know how the profit and loss is also in. So they will need the information, that's the accounting information, so that they will be willing to invest into the business. So now we are done with the users of accounting information. From here, we are moving to the qualities of a good accounting information. So what will make you know that this information that is given is a quality or is good, for us to know that this is a quality information? So yes, we have some characteristics of a good accounting information. Okay, so now we are going to look at the qualities or the characteristics of a good accounting information. When an information is good, it has to have some get some characteristics. So we are going to look at the first one. We have, it must be relevant. So before an accounting information will be quality or it will be good, the accounting information needs to be relevant. It should be relevant to the people who are about to use the information, like, so that they can know how they are going to make decisions. So first, accounting information must be relevant. Okay, 2. We are going to talk about the second one, that is completeness. Completeness. So completeness, we all know complete, something is complete, it means it's adequate, like it is complete, that must have everything, it should be adequate. So when some accounting information is good, the information has to be adequate, like it must be complete, so that it will contain all information necessary or needed in the information given. You get it? So now let's go to the third one. So the third one, we talk about timeliness. Timeliness. So when we say timeliness, it depends on the time that you are going to receive the information. So let's say we are in need of the profit and loss account now, but you didn't provide the account for us now, and you made it later, meaning it's not on time. So before accounting information will be good or it will be quality, it must be on time. It should be present at a time that it is needful. When we needed it, that's when you have to present it. That's the timeliness. So now let's go to accuracy. The fourth point, that's accuracy. Accuracy. So when we say accuracy, when information is accurate, meaning the information does not contain any error. It must be free from any error. Like, it shouldn't be containing errors in the information. So when an information is giving us error, meaning the information is not good or is not quality. So before an accounting information should be good or quality, it must be free from error. It must be accurate. Okay, so let's talk about the fifth one. That's accounting information must be up to date. Up to date. Okay, so when we say something is up to date, it is recent. Like recently, it must be from past years to now. So we must get information recently. We must get recent information. When accounting information is good, it must have recent information. Okay, so now let's go to the sixth one. That is objectivity. Objectivity. Okay, now when we say an information is objective or an accounting information is objective or objectivity, it means that it should be free from bias or personal judgment. Like, you shouldn't judge, you shouldn't be judged, or you shouldn't be biased when you are making the information. You shouldn't make any biasment. it should be free or it should be independent, meaning accounting information should be objectivity. Okay, so now let's talk about the 7 characteristics of a good accounting information. Now let's go to the understandability. Understandability. So we say understandability, it is derived from understanding, meaning the information has to be clear and then simple. Everyone who takes the information has to get the understanding, or the users must understand the information simply. There's no need for them to go for an interpretation again. That's the understandability. Now let's go to the 8th one, that's comparability. Comparability. So we say comparability, meaning we are comparing something. It is derived from the word compare. So to compare something, okay, so let's say we did an account, or we prepared a profit and loss account for the past year, and then we did some this year. So we should be able to compare last year's profit and loss account and this year's profit and loss account. And again, we have 2 types of comparison. We have inter-comparison and then intra-comparison. So when we say intra-comparison, that's what I explained. That's recent, last or previous account with recent account. But when we say inter-comparison, meaning we can compare the company's profit and loss or the company's balance sheet with other company or different company. So that's the inter-comparison. We can compare from our company to different company. That's the comparability. So now let's go to the 9th one. That is accounting information needs to be verifiable. So let's write verifiable. Okay. So we say verifiable, meaning we can verify it, we can cross-check. If you prepare accounting information, it should supposed to be cross-checked by a different person. Another person can cross-check it. That's the verifiable. Now, okay, so now the 10th one is accounting information must be reliability. So accounting information must be reliable. Like it should be trustworthy. We can rely on the information. If accounting information is not reliable, meaning the accounting information is not good. So characteristics about a good accounting information is that the information has to be reliable. Now let's go to the last one. Information. That's consistency. So the last one is the consistency. Okay, so we are going to talk about the consistency. So the consistency means you are going to use the same approach. The same approach. You don't have to change the methods and the procedures of preparing the account. So let's say you are preparing a statement of financial position using the total asset method or net asset method. So if you are using the net asset method, there's no need for you to be changing it all the time so that it will be confused. You have to use the same procedure for the preparation of the account. So this is where we are going to bring today's lesson at an end. Thank you for watching. Meet you in the next video where we are going to discuss the accounting equation. So how to use the accounting equation to solve accounting problems or to solve transactions. Thank you.